India actually works at villages. The role of technology, analytics, data cannot be understood. Bima Sugam will look to actually standardize the entire claim process, the process of a company selling insurance, as well as servicing insurance.
How do you think Account Aggregator or a DPI like Bima Sugam also help the customer quote their policies?
So the Account Aggregator or Bima Sugam will help the portability mechanism. The insurance sector this time around will take a lead in actually providing insurance to MSMEs and loans to MSMEs against those insurance policies. And that is where your Account Aggregator will also play a huge role. And given the thrust we have on MSMEs, I think this model should work very well.
Good evening and welcome to the next episode of Manthan. I am Shalini Gupta, the Chief Policy and Advocacy Officer at Sahamati. Joining me today is Mr. Rakesh Joshi, who is leading an important initiative in the insurance sector in India, the Bima Sugam, and has led the insurance sector to its current state under his leadership as a whole-time member at IRDAI. Mr. Joshi is also a advisory council member of Sahamati and has been guiding us to scale up the account aggregator framework, especially with respect to use cases in the insurance sector. It's a pleasure to have you here, Mr. Rakesh Joshi. Welcome to the next episode of Manthan. So when we look at the insurance sector today, sir, we can say that the glass is half full. So for example, we've made a lot of progress in terms of the growth and penetration of the insurance sector in India. When we compare India to some of the statistics from other countries in terms of the insurance penetration to GDP ratio, they're very promising. And in fact, a latest report has said that India would be the largest and the highest growth sector to come over the next 5 years. However, if we were to look at it a little deeply, there are issues which we all understand. There are gaps that need to be bridged, and there is a very ambitious goal set by the regulator, insurance for all by 2047. And if you look at the current coverage ratios, we see that insurance, life insurance, and both health insurance, the penetration rates are somewhere in the range of 30 to 35%. And even in those who are covered in health insurance, the general perception is that the coverage is not adequate. So, for example, most of them have a cover of less than 10 lakh, which may not be sufficient to meet their medical needs. So, what we are and where we are today is something which is very promising, but the path that needs to be covered is long. So, what is your perspective on the current state? How do you see the current state of inclusion in the sector? What are the areas that need improvement? If we can hear from you on this, that will help our audience.
Thank you. So let's look at it like this. When you say that the insurance sector is glass half full, I think it's 3/4 full now. And very soon it will be full. The government in the past decade or so has made huge progress in driving the inclusion as well as the penetration by its various Pradhan Mantri schemes. It has brought in the lower income bracket people into the insurance coverage. Having said that, that is government. Government has taken that initiative. The insurance industry per se also is now looking to take a similar initiative. Under IRDAI, they have come out with what is referred to as a state insurance plan, where the state insurance plan, each insurance company has been given one state. It's in the likes of the lead bank governance which is there for the banking sector. In fact, if you look at the financial inclusion, it was lead bank which had actually pushed this. Similarly, the state insurance plan, under state insurance plan, each company has been given a state, that particular company will drive the inclusion as well as the insurance coverage of that particular state. It's very focused. They come out with a state insurance plan, they go down, and remember, India actually works at villages. So the idea is that each Gram Panchayat should have a person from an insurance company, whoever the lead insurance company is there in that particular state. That company will have its person there at each Gram Panchayat who will insure or who will drive the entire insurance for that particular village. This will mean that inclusion goes up, penetration goes up. The insurance regulator also will possibly at some point in time look at combo products where property, health, life, all these three get combined so that the insurance, the common man doesn't need to run around. He takes a combo product and he's covered for the basic amount. This will ensure that we will reach the 2047 goal.
So what you've just told me is very encouraging, because otherwise, if you just leave it to the market to, target the segments, it will typically tend to gravitate towards segments which are highly profitable. But giving them insurance targets and the financial inclusion targets for the state, I think it will lead to a more focused coverage of segments that are lying out. So, sir, what do you think is the current your viewpoint on the current narrative, and what are the strategic resets? So one is, like you explained, was a policy and regulatory reset which was given to the insurance sector. But beyond that, what do you think has to change in the insurance sector for it to be able to deliver its goal? So one is giving a goal, and then you need to enable the insurance companies, be it a digital framework or use of DPI, or helping them with additional policy support as and where required. So are there any key areas which you think can really drive us towards that goal and target?
So, madam, today in this world, data is the new oil, right? There's so much of data in the market. You have, on one hand, you have the India Stack, you have the Account Aggregator, you have the insurance company's own data, right? You have the claims data, you have the banking data, you have the mutual fund data. All this data need to be used to come out with effective underwriting, which in turn would actually mean that cross-subsidization of premium. So I'll explain what I mean by cross-subsidization of premium. Cross-subsidization of premium will not take place, and a person who deserves to get a much better price should get a better price. By cross-subsidization of premium, what I mean is, assume for a moment that my hair are not white and both of us are of the same age and we need to buy policy, a life insurance policy. Both of us go to the insurance company today. The insurance company says, okay, you give me the following documents, health records. Assume for a moment both of us have the same health records. You give me what all assets you have. Both of us have similar assets. And the insurance company then gives the premium. Lo and behold, both of us have the same premium. However, remember, I drive a car and I banged my car at least 5 times. You are a very safe driver. You have never ever had an accident. Chances are that I will die an early death by an accident, whereas you, being a safe driver, would not. Typically, therefore, the premium which I have had to pay for my insurance policy should have been much more than what you pay. So this is cross-subsidization, right? The more the data you get, or the insurance company gets, more effective is the underwriting. The role of technology, analytics, data cannot be understood. Today, you cannot ignore that fact that the data pools which are available need to be taken advantage of, not only for underwriting, but also for deciding whether the person is underinsured, for penetrating into the last mile. Imagine a person sitting in a, a village in the border who wants to buy an insurance. Why should he buy an insurance when he does not know, when he knows that it's going to take 3 months for his policy to come to reach him, and he doesn't know how to use, how to go about it? He should be empowered to actually buy a policy there at his doorstep, and that policy should be delivered to him in seconds. Given the government's initiative of connecting each village on the internet today, it is possible to do that. I think the entire policy of connecting India has now reached a stage where the common man is getting his dividend. So the harnessing of data pools, using it for underwriting, better usage, are some of the areas where we need to work on. The KYC is another portion where, given the fact that you have today the digital infrastructure, KYC is becoming easier. A person does not really need to sit down and fill the form, the 5-page of form which he has to fill. It can all be auto-filled. So there are so many areas where the technology can be brought in to improve the customer experience.
So that's very interesting. So what you've talked about is a combination of data, technology and analytics, which will obviously need both data and technology. And what you've explained is something which can change the face of the insurance sector. But do you see anything in the recent past of, let's say, last 5 or 10 years that has actually brought a difference in the way, insurance is being created and distributed? So what you're saying is something which can be improved going forward. But in the past, how do you think DPI has ended up making insurance sector more efficient and more accessible, amenable to the customer who is seeking an insurance policy?
So today the digital infrastructure, well, it is definitely creating a lot of value for the insurance companies, right? Account aggregator, though the insurance companies are using it to a certain extent, that will actually enable the insurance companies to do a much better underwriting, to understand the customer much better. On their side, they will be able to provide the other financial institutions. And given the fact that the account aggregator system has just come in the insurance, and more insurance companies are using the account aggregator system, to understand whether there is an ability on the customer side to pay that much amount of premium or not, to understand whether there is a risk of fraudulent transaction or not. The insurance industry has already started to use that, and they are getting very rich results. I think it's just a matter of time when more reliance is made on account aggregator system, at least in respect of the other financial data. So, and insurance companies to provide data to the account aggregators, FIPs, so that the other financial, the rest of the ecosystem also benefits. That is the change which I have seen over the past, I should say, about 5 years.
So what you're saying is account aggregator is something which can be that lever of change in the insurance sector, and some change you're already observing on the ground. But as an industry body for the account aggregator framework, today when we look at lending, for example, there are 5 to 6 exciting use cases that have come up, starting from underwriting, collections, risk monitoring, even internal compliances. But in the insurance sector, what we have seen is a mono case where it is being used to underwrite a term life insurance policy. That has picked up really well, and that is also delivering a lot of impact for the insurance companies who've actually started using it. But when we go and interact with the industry for other powerful use cases, beyond just underwriting the term insurance policy, and what you've given as an example in the first segment on health insurance, and there is no reason for a safe driver to be charged at the same premium with someone who's got a history of risk driving. So these kind of use cases, when you talk to the insurance companies right now, we see that while they're very excited and they do think it is very transformative, but that acceptance to that change and for them to reorient themselves to start ingesting more of this data and come up with products which are more customized to the need and the actual risk of the customer, that we still think is something which is a little in the future. What is your assessment on the same, given that you've been observing this sector very closely as your previous role and your current role as well?
So let me tell you one thing, ma'am. The banks were the first to adopt the account aggregator framework. That is because their touch points were more. So you and I go to a bank or do a transaction with a bank many more times than you and I go to an insurance company, right? So the touch points are low in case of insurance, high in case of a bank. So the banks were able to come out with the use cases much faster. The insurance companies, of late, and I'm seeing this in the last 2 or 3 years, more and more insurance companies are looking to use the data from the account aggregator. And you will have to give them time because, as I said, the touch points are few. For example, a life insurance company possibly has a single touch point. That is when you go and buy the insurance, right? After that, you don't visit the insurance company. A health insurance company maybe has got a touch point once in a year. Some of them don't even have that. So quite a number of health insurance companies actually give you a 3 years policy. You don't go and visit the health insurance company at all. No representative of the health insurance company comes to you. Motor every year, right? But an yearly touch point, again, to create a use case there, it's slightly time consuming. Definitely, yes, they have been using it in the area of underwriting. But more and more will come as they slowly start understanding. So let's look at it like this. The insurance companies have used it in certain cases. As they have found good results coming out from that, that will expand. So you'll have to give it some time. I don't think the industry is not going to do it. I think the industry will do it. It's just that they need that extra time.
So what you're saying is that definitely currently in that exploratory stage
That's
where
right.
they're trying some of the initial use cases, and the initial results will drive their future.
Absolutely, ma'am. Absolutely.
And one important point which you've raised here is the character of the insurance sector, where the insurance manufacturers seem to do not have as many touch points with the customer like that in the lending sector. Here, I think the interaction is mostly through the agents and
That's right.
field staff. And that would actually mean that assisted journeys will be really important.
Very much so. And not only that, ma'am, the biggest thing which the insurance sector will gain from the account aggregator framework is it will be able to synthetically develop touch points. The use of word synthetically develop such touch points is if it is seeing footprints of a customer in another product, using those footprints, it can then take it into its own books, the similar footprints, and try and do the analysis. So saying that if an insurance company is seeing what has been happening in the account of an individual, a bank account of an individual, what his spending habits are, how this entire thing is going forward, it can then come to a reasonable conclusion using that information. This is the biggest use case which the insurance company gets. So he creates a synthetic footprint in his own book.
So, sir, then another question that comes to the minds of the audience is that the banking information was available even before the pre-account aggregator era. And now what account aggregator has done is just change the mode and form of the data sharing. And it is like consented, secure, and all of that. So are we saying that the channel itself and the basic characteristics of the channel will now make it more convenient and easy for the insurance companies to adopt? Because data was already there.
Okay, so I'm going to ask you a question, madam. Pre-DMAT era of equities were always there, right? I don't think you have seen that era where if you were to purchase equity of a particular company, there would be a truck coming to your doorstep. If suppose you were going to purchase a good amount of equity, a truck would come to your doorstep and take out cartons of share certificates, right? Now, that changed with DMAT. And with DMAT, what came about was trust, stoppage of frauds, and convenience. As a result, the equity markets boomed with DMAT. Same is the case here. The day anything goes digital, the convenience, the trust is easy to have. That's the reason. Yeah. That's where, and I remember when I was a young man, to get a statement of accounts was a task. It used to be handwritten, and half the time you couldn't read the handwriting. Now you have here, at a click of a button, if I get the statement, obviously, that's much easier for me.
And that statement is something which is from the
trusted
source. Yeah, it is from the source, digitally signed, so you don't really need to verify the authenticity. So that, according to you, is something which will which will change the way, in a way, insurance sector has been working till now, because there was a lot of friction in the current sources.
Madam.
And sir, you'll see similar things happening on the health data side, right? Because this account aggregator is all about financial data, but I think a powerful combination of health and financial data will make this even more powerful. So,
underwriting will become better, definitely, yes. Health data at some point in time, I think NHA is already doing fantastic work on the health data, the ABHA initiative. They have come out with a health exchange. I think if we start getting the data in digital form, and I know that it is not a very easy task to get all that health data, to enroll all the doctors, all the laboratories to provide the data. It is a mammoth task, but I think they've done a fantastic job. Whatever they have done till now, it's been wonderful. And at some point in time, see, it's easier to get the financial data because it was there in the hands of a few entities. Right. Imagine how many doctors are there in India. I don't have a count. Getting data from all those doctors. Yeah. How many pharmacies are there? I have no idea. But the health ministry has actually reached out and has done a superb job on that.
And I think there's a start that has been made. It will
absolutely,
take time.
And it's a start, and I think they're going ahead with this entire thing. Right. So hats off to them.
Yes. So one additional question which we also had in mind was, typically the perception is that the accessibility to insurance in India, particularly on the health and life side, is easier for salaried segments, high income segments who have some sort of financial statements to back up their risk worthiness. And they this is a segment which you can easily assess whether they're suitable for an insurance product or financial product. But it is actually not true for segments like self-employed or low income, or even the rural segment which you had earlier mentioned. So are we actually looking at an era where there would be products which will be designed, customized to serve each of these customer segments, which is where we will be able to meet our goal, right, on financial inclusion?
Definitely, I think the government also has done a stupendous job actually bringing the lower group and the missing middle into the health insurance. We have a situation, so from the industry side, the industry and the regulator together are looking to come out, as I said, with a combo product, which would include health, life, personal accident, all this together. And it'll be a combo product. Now, and the industry is super excited about it. The regulator has really done a superb job on this. Once that comes, I think we will be addressing a large portion of the missing middle. And today, post-COVID, even that missing middle and the lower class or lower income class has all of a sudden realized the importance of having a health insurance. If you look at it, even a person, let's say, who is working as a house help today, actually comes up and asks which insurance company should he or she buy the health insurance from, which is really good, which is really good. The gig workers, the companies who employ these gig workers have started giving them health insurance, personal accident cover. So as a part of their HR initiative, they started giving this. So slowly and steadily, this will, again, the way things are today, every day. So if you look at any insurance company, the growth is in double digits. And the reason is just this: more awareness is coming in. And as people become more aware, I think it's but natural that this thing will get covered. It's more a word of mouth now.
Yeah. So what you're saying is the customer is now aware of insurance as an integral part of their financial needs, and there are companies who are willing to serve those segments, and that actually brings us to the next segment of our podcast, where we'll want to understand that one is that you are issuing a policy to a customer, right? That is the easiest part because that's where the customer has to be assessed and he has to pay the premium, in the hope that when there is a need and when that actual event for which he's taken the insurance unfolds in his or her life, he'll be able to get that money in a seamless manner from the insurance company. So starting from sourcing, underwriting, there is an entire life cycle of that customer, which actually means that the customer needs to pay the insurance on time so that his policy doesn't get relapsed. Then there is a claim processing process. In the case of life, there is also a nominee process, right? That the money has to reach to the nominee or the family members of the customer. So this entire journey has to be streamlined and stitched together. And the way sourcing has become digital and seamless, I think as an industry, that all the steps and all the life cycle events of that customer for that policy has to be stitched in a similar manner. And that's where I think we today, the buzzword is Bima Sugam coming in and ensuring that the end-to-end cycle, life insurance cycle of a customer is taken care of. So we would like to hear from you the entire thought process behind launching Bima Sugam. What are the pain points it is trying to address, and how will it transform the insurance sector as we move forward?
Thank you very much, ma'am. So let's start this way. Bima Sugam is a place where you can buy insurance, you can service insurance, you can settle insurance, and in case you have a grievance, you can put in your grievance. On one hand, Bima Sugam would look to leverage, and you remember what I told earlier, the data pools. So Bima Sugam would look to leverage the data pools, that is the India stack, and on the other hand, provide analytics. Bima Sugam is an industry-led initiative blessed by the regulator, and it will carry the entire insurance ecosystem. So typically, Bima Sugam will look at assisted sales as well as direct sales. Assisted sales would be those by the agents, brokers, they can come in there. Remember one more thing. Today, the agents also have issues. By coming on to Bima Sugam will look to address many of their issues in the sense, what is their billing like, how many policies they have sold, when should they get their money, all these things will be there. They will be registered with Bima Sugam through the company which has recruited them. They will have a number, will do their business. If you want, you can come directly onto Bima Sugam and do your policy. Imagine you have 5 insurance policies, you want to change your address there. Today, you have to go to 5 different insurance companies. If you could do so at a click of a button and all the 5 addresses got changed, nothing like it. Your journey has become much easier. For settlement of claims, why do you need to fill in all those forms? Rather, go on to Bima Sugam, fill in your form there, and your claim would be settled through Bima Sugam. Today, what the industry actually has is a very non-standardized view. So, company A requires this kind of a form, company B requires a different kind of a form, company C requires a third different kind of form. The biggest thing which digitization does is brings about standardization. Once things are standardized, chances of these things going wrong becomes null. So Bima Sugam will look to actually standardize the entire claim process, the process of a company selling insurance, as well as servicing insurance. As I said in my earlier example, life insurance company does not look at, today it is not looking at how many motor accidents I've had. Bima Sugam will be able to provide such analytics to the insurance companies as to how or what has my history been. This, therefore, will enable the insurance company to come out with much better underwriting and possibly more scientific insurance pricing. All this will help who? The customer. And the customer carries his insurance policy in his pocket. So remember one thing, ma'am, nearly 70% of India is on the move today, right? A person who has gone as an agricultural labor from maybe Bihar to Punjab, let's say he faces a problem in health, he has to be operated. What does he do? Either he calls up his wife back home and says, please send my policy, or he doesn't use his policy at all. So he says, why should I have a policy at all? Imagine if he is given that facility where he can carry his policy in a dematerialized form in his phone and go to the hospital and say, here's my policy, please admit me and do my operation. So if I were the laborer, I would get my appendicitis taken off without paying any money. He is now a happy person, right? He has more faith. The other thing is, today, we all say insurance is a push product. The reason is, I as a customer do not participate in the manufacture of the product, right? It is the insurance company who decides what's good for me. Tomorrow, if I participate in the manufacturing, obviously, my way of looking at insurance changes. The same way, at some point in time, banking was a push product, it became a pull product, right? Same way, insurance, I'm sure, at some point in time will move from push to pull.
So what you're talking about is the customer getting more choice, more
Yes.
control, and more convenience, and a belief that this policy will actually help me when I actually need it. And it will be a true friend in need
Yes.
for me as and when I need it.
You said.
The fourth aspect, which is very typical and what we have seen in lending, is portability. So, how do you see portability evolve in the insurance sector? To give you an example, if today I take a product from an insurance company, and I really want to change my insurance provider because for all you know, I'm getting a better premium, or you know, the benefits provided are higher. But then I cannot, because my current insurance company has certain riders because of which I cannot move. And I think there was some issue, direction from the regulator around helping that. So how do you think account aggregator or a DPI like Bima Sugam also help the customer port their policies if they're not happy with their existing service providers and they really need to change? Then
So,
will it?
ma'am, portability is allowed.
Yeah.
Portability is allowed, and the only thing, one can port only at the time of paying the premium, for obvious reasons, that once he has paid the premium, the risk has been taken by the insurance company. And midway through, you cannot say that, no, I don't want you, I'll go somewhere else. Because the risk has already been taken. So that risk has to run its course till the next premium date. So you're paying a premium every year. You can port your policy every year. So the account aggregator or Bima Sugam will help the portability mechanism. The portability is already there. So today, the portability is done through IIB, where they give the details, etc., etc. I think at some point in time, Bima Sugam will actually make it more convenient, if I may say so, for portability to be done by a customer. I don't think we require any regulatory interference in that. So regulations have already permitted that.
Yeah. So what a new insurance company, the one which is the prospective one, will need is the current insurance statement of the customer, which is again
the
data.
current insurance statement. They will also require how many claims, the past history, etc.
Right.
So all that can come from whether the new insurance company would require the account statement, the past history, which can come through the account aggregator, the insurance side, where insurance would provide the information to account aggregator and then back to the next thing. So all that can be worked out, but definitely yes.
Because as portability as a concept, while it is very beneficial for the customers, it is again about giving them control and choice. From the provider perspective, we typically see that it is seen as a business loss. And we've seen that happening in the lending sector also, because once account aggregator comes in, you are democratizing data. So you can no longer retain a customer just because that data is residing.
You cannot control the customer.
Yes. So now what you to do is you have to compete on other parameters, which are your real advantages, be it your the cost, be it your service, be it your delivery time. In the case of insurance, your claim processing and all of that. So we'll have to see how does that play out in the insurance sector. And
so definitely you will have at some point in time, somebody will come up with it, the rating of an insurance company for a customer, like what you have, a 5-star rating or a 4-star rating. And based on that, people will then look at those parameters and say, okay, claim faster, premium not good, brand, and they would take company A. The choices will come about. So that definitely yes.
So one additional question we would also like to understand, and we have a doubt on, is that what was the need of Bima Sugam in the insurance sector? So like you said, there was a need for a marketplace, a single point which can address all the pain points of the customer. But any specific reason on why the regulator took that leap and said that I will build it for the insurance sector? And how do you?
The regulator has not said that they will build it. So this is an industry-led initiative. The industry has come together, seeing the value in Bima Sugam. They have come together to form the Bima Sugam portal. It has been blessed by the regulator. The regulator also sees value in it. There are two portions to the entire Bima Sugam thing. Number one, the industry gains a lot in terms of underwriting, ease of doing business, easy plugins, analytics, KYC. All these are beneficial to the company, right? Agents, they get, again, they don't need to invest in technology. They can come onto the platform and do their sales, assisted sales, and all their issues get sorted out. Whatever the issues they have been having with the insurance company, that gets sorted out. They have a much better, so their experience improves dramatically. The customer, obviously, he is getting a single platform. He can do anything there. Whatever the touch points are, he can do everything there. The regulator also now has a one-stop shop to get his analytics. So the regulator would be able to come out with policy initiatives, determine, do their own analytics, and come out with policies which would then guide the sector in a much easier way. So it benefits, it's a win-win situation for all, right? Today, globally, nobody has used data in insurance sector as what Bima Sugam proposes to do. There's a lot of buzz about Bima Sugam abroad. People are watching it as to how this entire story unfolds. It will also provide industry with a lot of new products. Imagine today, how many people take loans against insurance policies? Rare, right? You can easily take a loan against your life insurance policy, but people don't. The reason being that there is a question of assignment and so on and so forth. What stops the insurance companies to develop a product whereby lending also becomes a part of their product? They're allowed to lend, right? They can lend as a part of their insurance policy. And for the customers to take those loans. So maybe if my life is insured, an insurance company could charge me a much lower rate of interest because the security which is there, he has my security, right? And he is giving me a loan against my policy. Well, he can charge me a lower rate of interest. And I am happy because I'm not breaking my insurance policy. I'm still covered. So when I'm building a house, I need not go to the bank to take a housing loan, right? And I was having this conversation, with a few bankers the other day. One of the major reasons why the rate of interest is so high for MSMEs is because the bank's risk systems tend to actually say that, look, there's a chance of default here. Obvious. And they have little recourse. If I am an MSME holder, or if I am an MSME proprietor or a partner, if I have an insurance policy on my goods, say a fire insurance policy, my life insurance policy, should not the banks charge a lower rate of interest? Question one. Remember what used to happen earlier in property insurance, where people would buy a house and the banks would charge huge rates of interest. That was because, again, the risk management system, the bank said, real estate, risky. What happened there? As more and more insurance came in, the bankers became happier. And therefore, the rates actually moved down. not only because of insurance, but well, they recognized that this was a place where they could lend. Insurance added its bit by reducing the risk for the banks to a certain extent. I would think at some point in time, the insurance sector this time around will take a lead in actually providing insurance to MSMEs and loans to MSMEs against those insurance policies. And that is where your account aggregator will also play a huge role, where if an MSME has taken an insurance, the banker gets to know about it through the account aggregator network that, look, the MSME has taken insurance policy of the managing partner or whatever that is. Therefore, the risk is lower. You don't need to charge him 18%, charge him only 10%. And therefore, his pricing becomes better. Now, overall, who gains? It is the MSME. And given the thrust we have on MSMEs, I think this model should work very well.
So what you've brought about is very interesting. It's not about insurance data and banking data being useful to insurance. It is also about saying that your existing insurance is also your data, digital data footprint, which can actually help you with other aspects of, your financial inclusion, which is lending. So what you've explained is a very powerful use case, lending against insurance, which, like you said, was always available, but the process was not
very
lengthy. And the way we've seen it happen in the securities market because of the demat securities come in, and with the data being easily available through account aggregator on your existing holders, this is something which may be, a use case which is in the near future.
Yes.
And Bima Sugam could actually become that repository of demat insurance policies. There could be an auto lien that could be marked.
Yes.
And a lien revocation, the way we are seeing this happening in the securities market. So this could be a real unlock. And the second use case, which you explained on the MSME being able to use the insurance as something to prove their credibility and their financial strength, is again very useful for the lenders, because they've also been relying on the banking data for long. And there is a need for them to, like you said, if they have to lend to the MSMEs, there's a need to diversify their data on which they underwrite the MSMEs to see if the risk is actually as high as they perceive. So very, very interesting. And I think these two use cases are something which could...
And Bima Sugam and account aggregator work together on this. This is a huge win-win for both of them.
Right. And so coming to the real operational question, so we do know that account aggregator and Bima Sugam and insurance as well as banking all coming together and creating this data democracy would be really powerful. But in terms of the actual, use cases, Bima Sugam, both as a FIP and FIU, what do you see are the opportunities where account aggregator and Bima Sugam can work together?
So my view on this, for an account aggregator to tie up with 76 odd insurance companies is, I should say, not necessary. Bima Sugam can be the nodal point for the tie-up, and for Bima Sugam, the account aggregator framework can be the nodal point. So a single point tie-up on both sides, and then it can then disseminate data on a consent-based dissemination as well as the need-based dissemination. So not everybody gets the data, only those who need and for whom the consent has been given get the data. I think, this, the two of them can work very closely together to come out with a very, very good model and a robust model to ensure that this takes place.
Yeah, and again, I will draw parallel to the security markets where the two depositories and the RTAs are the information providers. So if that happens, it can actually bring great lot of efficiency to the account aggregator framework and also for the customer, because at the end of it, what they do is based on their consent, their data is made available easily on request, and the industry becomes more efficient because the number of integrations that are required for that data to flow in comes down. So there is a repository or a central place where data is available. While I understand Bima Sugam will not store the data, but a mechanism to have that data in one place, and account aggregators play the role of the consented data pipes, which enable the flow of that data. So this is something, and that would you be is there any plan immediately to integrate account aggregator in the design and implementation?
There is. In fact, we would be from Bima Sugam side, we would be reaching out to the account aggregators to actually take them on board. And definitely, what we would look at is instead of onboarding 5 or 6 account aggregators, if there could be a single account aggregator or a aggregator of the account aggregator, if I may say so, that would be the best. Rather than, because remember, the more the APIs we have, and we'll open our APIs to everybody, but maintaining those APIs become an issue. We would rather connect with the aggregators there, because we ultimately have to connect to the entire insurance ecosystem and the customers. So we don't want to actually have too much of latency.
So on that front, even the account aggregator industry is working on solutions that for a FIP or FIU would reduce the number of integrations they need to do with multiple account aggregators. The concept of multiple account aggregators was introduced because they play the role of a consent manager for the customer. So there needs to be a choice, and that was the reason to have multiple account aggregators. But like you said, for the FIP and FIU, a single point of integration with the choice being retained for the customer, whom do you trust to manage your consents, that is something which we are also working on as an ecosystem. And I think by the time
you guys come out with it fast.
Yeah, so if we can, I think by the time another few months, we'll also have a solution.
Perfect.
Yeah. One question again we want to understand from you, sir, is the significance of anchoring Bima Sugam as a Section 8 governance structure, and how do you kind of signify, is it to build digital trust in the platform for the customers, and what exactly drove this decision?
So why a Section 8 company? Bima Sugam is the bridge which connects the insurance ecosystem with the customer. The idea is not to make profits. Idea is to be of service to both the insurance ecosystem as well as to the customer, and provide value to them rather than look for profits. Section 8 company and the governance as seen in Section 8 provides me exactly that. And that's the reason why the industry chose that it is better that we go through the Section 8 route rather than becoming a for-profit route. And remember, if we are able to provide value for both these, I think we would have made our profits. That's what we are looking at. And that's why the Section 8 company. And Section 8 company also enables me to act. It doesn't stop me from holding back. So whatever, if in case we were to get some money for expansion, etc., we can still do it. It doesn't stop me from that. But we are not there for profit motive. And that's why the Section 8 company.
That's, I think, truly captures the essence of Bima Sugam, that it is there to help the customer and the industry evolve and meet the needs, insurance needs of the country as a whole, and rather than being a profit motivation which led to this venture. So another question we will now want to, and another segment in a way, is while we have talked about technology, data and analytics, the latest kid on the town is artificial intelligence. And what is the view of the industry, particularly from the policymakers and regulators, on embedding AI-based products for the insurance sector? And where do you see the use of AI-based products in the insurance sector in terms of its ability to create a lot of value for the end customers?
AI today is still in its nascent stages. When I say nascent stages, at times, we look at AI to get into, so AI starts hallucinating. So you train a brain and the brain starts hallucinating and gone. So we would take baby steps on AI as of now. Definitely, yes, AI is something which we will look at. We'll try and experiment with it. But right now, straight away getting into AI is not an option we are looking at. Because, again, I have read a lot of articles on AI. AI is mainly predictive. And today, AI actually is got the maximum amount of use cases in HR and amazingly in deciding whether a person is guilty or not guilty. So it's very predictive. As I said, to take a decision, possibly AI till date has not evolved to that level. What AI can be used, like what Chat GPT, etc., is there, AI can be used to answer questions. And these questions, so typically, what is insurance, etc., we will start off with that first. Possibly, we'll have a brain, but we will not make it a complex one. And possibly, we'll answer your basic questions on insurance to start with. As we progress, as the AI progresses, as the computer engineers delve more into this, maybe we could use it in other ways. There could be very many other ways in which we could, come out with that. But as of now, I don't think there is too many this thing for AI. AI is still in its very, very nascent stage, if I may say so.
So what I'm hearing from you is that while it would have a lot of potential in some very basic use cases like, the initial
Anything repetitive.
Anything which is repetitive, but decision making is something which you
Will
don't
still
see
be
as
with-
something very immediate
Absolutely.
in the insurance sector, at least in the insurance
Oh,
sector.
yes. So there's a very interesting book, if you ever get a chance, read it. It is written by a Princeton professor called AI Snake Oil. Read it. It's very interesting, which gives you an idea about how far AI can be used.
And I think India as a country, and given the kind of opportunity we are looking at and the coverage we are looking at, within one country itself, there are so many cohorts of customers and all. Maybe introducing AI at this stage it may be actually something which may be not fully unbiased. And what we need currently is a very unbiased view of the customer segments and looking at products that meet their needs and requirement, rather than some intelligence built on the existing products taking that decision. Absolutely. So I think to that extent, what you're saying is very powerful, especially for a country like India, where what the kind of segments you get into will be different from the
and it has to be baby steps.
Yeah, it has to be baby steps. So before we conclude, we'd like to leave the audience with some closing reflections from you. Your perspective on two final questions that can offer key takeaways for everyone in the industry and our audience who's been really excited to hear your views on the entire sector. So the first question which we'll want you to share your perspective on is, in your view, what will be the biggest unblock for the Indian insurance sector over the next 5 years?
Bima Sugam.
Great. That's, I think, was an easy one, and currently you're leading that.
So as more and more digitization takes place, insurance will become very, very powerful. The industry will become very powerful. And it is a must that digitization should take place. Usage of data pools through account aggregators, through India Stack, etc., would really help bring down the premium and make it more affordable for common man to purchase this. So the digitization and all this is what Bima Sugam needs to do.
Yeah, definitely, sir. That's interesting. And if you had to leave one message, each for three key groups: insurers, regulators, and innovators, or in the insurance sector, what would that message be?
So I'm sorry, I cannot leave a message to the regulators. Obviously, they are not, so they have a mind of their own. And believe you me, they have been doing a stupendous job in regulating these markets. For the insurers, they would be enabled by Bima Sugam and the other data pools. They need to take this opportunity and carry it to the last mile. The industry has done a stupendous job over time. They have grown, and even during COVID times, they have taken losses, done a fantastic job for the population. I think they need to just carry on that job, but they also now need to take up the state level insurers' job and push the insurance to the last mile. That is what the insurers need to do. And the third one was?
Innovators.
So innovators, well, for the innovators, that's a huge opportunity awaiting you. Come out with use cases, come out with your innovations using the data, or how you can come on to Bima Sugam to come out with much better. So while we have the very simple way of looking at things in Bima Sugam, how can you add value? Like what a GPay or a PhonePe, etc., has done to UPI, how can you use Bima Sugam's infrastructure to come out with newer products? So it's an open field for the innovator. The InsurTech definitely needs, so once Bima Sugam is in place, the InsurTech would have a field day. And they need to put their thinking caps on and start working.
Yeah, so what you're saying is that there is a DPI which is now available for everyone to use, and it is up to the respective,
and how they use it.
How do they maximize and
yes,
their usage and their service to the end customer? That's very.
So I look forward to that.